Good evening. Welcome to the awareness session on stock borrowing and lending and regulated short selling by Colombo Stock Exchange. So basically, there are two parts to this awareness session. One is on stock borrowing and lending, and the other one is on regulated short selling. So we'll start off with regulated short selling. So short selling is you are selling something which you don't own or something which you don't have in your account. So we call that naked short selling. So at the start, the CSE will not allow naked short selling, but we are going to introduce what is called regulated short selling. So there are two options that you can follow when doing regulated short selling. So we are introducing stock borrowing and lending also at the same time to facilitate this regulated short selling. So option one is first you need to do a SBL transaction and borrow shares from a lender to a CDS account to do a short sale. So you borrow and do a sale which will be flagged as a short sale. Second option is you do a short sale today, but you need to ensure that you do a borrowing transaction to your CDS account by the end of the trade date. That means the date that you did the short sale, you need to ensure that you cover the short through a stock borrowing and lending transaction. Uh, you would also need to note that only certain securities of companies will be permitted by the stock exchange to facilitate regulated short selling. So this will be decided based on a criteria which will be reviewed every quarter. Only those companies securities will be allowed for regulated short selling. When it comes to the actual order entry for short sell orders, we will be introducing the sell check. That means currently, when you do a sale transaction, the system, the CSC trading system is not checking whether you have balances in your CDS account or not. Only order management systems is capable in checking that. But with the introduction of stock borrowing and lending and regulated short selling, we are reintroducing that check back to the automated trading system. So when you do a short sell order, you need to flag the short sell as a short sell order in the ATS or in your order management system. That means in your trading terminals, when you do a sale transaction, there will be an additional window where you will be able to select short sell orders. Then only you will be able to do a short sell transaction or an order. So in that case, any validation on the balances will not be working when you put the short sell flag. So this can be entered only during the regular trading session, not in open auction or buying auction. Only during regular trading, 9:30 to 2:30, as at right now. Orders can be placed only as a limit orders. So many market orders will not be allowed. Only limit orders, and they will not be carried to the next market day. So mind you, it has to be limit day orders. So no any good GTC or GTD order, but it has to be limit day order. So it will not carry until the next market date. And the short selling can only be done on the normal board, and it will not be allowed in the crossing board. And internet traders should also be restricted from entering regulated short sell orders. So there will be a new rule which will be introduced with regulated short selling. We call it the uptick rule. That is where when the price of a share declines by 10% from the previous closing price, the system will do a validation of the short sell orders, and this will be submitted subsequent to the price depreciation based on an uptick rule. And under this uptick rule, any short sell order that shall be at least one tick above the last traded price of the share. That means if the share price declines by 10% from the previous closing price, you will only be able to put a short sell order one tick above the last traded price of the stock during that day. And if the price of that security declines by 20%, so regulated short selling will not be permitted until that price appreciates from the given limit. So if the price declines by 20%, only the short sale orders will not be available, but you can still continue with your normal sale orders. So this is the uptick rule which will be effective with the implementation of regulated short selling. if you look at how we can use both regulated short selling and stock borrowing and lending in the market, first you need to borrow shares to your CDS account, and you will sell that stock in the market at the current market price. Uh, why do you want to do a short sell? That means you anticipate a price declining in the market at a later point, so you sell it at the current market price, and at a later point on a future date, you buy from the stock from the market at a lower price, and then you return that bought stock to the lender on the agreed return date. So this is how you profit through SBL and RSS. You sell it at the market price, you buy at a lower price on a later date, and then return to the lender on the agreed date. There are certain non-compliances that we need to talk about. Like I told you in the first slide, that there are two ways that you can do it. The option two is where you do a short sell and borrow within the day. So in the event if you don't cover that short by a borrowing transaction on the T date itself, then it will be a non-compliance, and there will be consequences in terms of the rules. And so any trading participant will have to ensure that delivery of securities via buy-in board or any other mechanism on T+1. So you need to ensure that the settlement of that security will not be failed. So moving on to stock borrowing and lending. This is a mechanism where we connect lenders and borrowers. So lenders are the people who will have shares in their CDS account that they do not intend to trade immediately in the near future. Borrowers are the people who will see an opportunity in the market, specifically in a declining market, so they can borrow and do a sale and recover the shares, like I explained before. So the main reason why we are introducing this stock borrow lending is to facilitate regulated short selling. Opportunities to the lenders, it's an opportunity to utilize a portion of the portfolio that they are not used for regular trading, so they can use dormant portfolios, and they will earn an additional fee based income. When you are a lender, when you lend out shares to a borrower, when the borrower returns the securities on that agreed date, he will also be paying you a additional fee, which we call it the lending fee, based on the rate that you agreed at the point of entering into that SBL transaction. So to the borrowers, like I explained, it's an opportunity to gain from a price movement in a declining market. Benefits to the market, as you can understand, there will be dormant portfolios and shares will be coming into the market. So it increases the liquidity and increases the transactions, the turnovers. So indirectly, so it will help us to attract more investors to the CSC, and enables introduction of the regulated short selling, and also provides a hedging mechanism that can be used in a market downfall situation. Currently, what we can use the profit mechanism is only there in the event if the market is going up, but with the introduction of regulated short selling SBL, you will also be able to profit in a downfall situation. There are two parts in SPL transaction. First leg is where you initially borrow the securities from a lender. So the moment the lender and the borrower transaction is met, so this is not in the ATS trading terminal or in your order management systems. This is in a separate system we call the central depository systems, which will only be available to your brokers. So the orders will be placed through this system. So lenders and borrowers will place orders through their investment advisors or the brokers. So once the orders are matched, a transaction will be executed and security will be transferred from lender to the borrower immediately. So at the same time, the borrower will have to keep a margin collateral with the CDS prior to entering into that uh, borrowing transaction. We'll talk about the margin in the next slide. So on the second leg is where borrower returns the securities to the lender on that agreed date. So the moment you enter into your first transaction at the first leg, you both parties will agree to a certain return date and an interest rate that the borrower is willing to pay. So on the second leg, the borrower will have to pay a lending fee based on that interest rate that they agreed at the first point. and also he will have to have securities available in his CDS account so that the borrower securities will be transferred back to the lender as promised. So at the same time, any collateral that we have taken from the borrower's broker participant will be released back to the borrower or the borrower's participant. So the margin is where, yeah, if a borrower intends to enter into a borrowing transaction, he'll have to keep adequate collateral to the CDS through his participant, that means through his broker firm or custodian bank. This can be in the form of bank guarantee, cash, and securities as well. So this will be used by the CDS to compensate the lender in the event the borrower defaults on his obligation on the return date. So this is the lending fee, the income that the lender gets on by lending the shares to a borrower. So every SBL transaction, borrower will be paying back a lending fee when he's returning the shares. So this will be calculated on the return date based on the interest that they agreed and the number of days. So this is the formula: lending fee equals to rate into loan value into borrowed number of days divided by 365. This is a very simple example. A client has lent 1,000 shares to 30 days. The lending rate is 100. The closing price of the the stock, the return date, the day before the return date is 100 rupees. So the lending fee will come to 8,219.18 cents. So when the borrower returns the securities on the return day, he will also be paying back this 8,219 odd rupees back to the lender as the lending fee. So this is the income that the lender gets. The maximum amount of shares allowed for borrowing and lending is kept at 5%. So we will not allow the total number of issued shares to be available for stock borrowing and lending and regulated short selling. So it is kept at the maximum is 5% at any given time. So only securities of companies permitted by the CSC will be available for SBL transactions and regulated short selling. We call them the eligible securities. So the criteria will be determined by the CSC based on a specific methodology on liquidity, and we will review this the basket of securities every quarter, and this securities, the list of securities will be communicated to the market every quarter by the CSC through public channels. So corporate actions, in the event a corporate action is announced on a stock that is under a stock borrowing and lending transaction, there are two ways that this can be handled. First is the lender has the option to recall in the SBL transaction early. We call that early recall. So if the lender wants to be entitled for that corporate action and receive the benefit from the listed company directly, he will have to recall the SBL transaction. So the borrower will have to return the security uh, to the lender as requested, but the lender will have to give minimum 3 days notice to the market or to the borrower. Alternative, if he does not want to recall the SBL transaction, the CDS will ensure that borrower will be paying that benefit of the corporate action to the lender on the applicable date as a cash compensation or a cash payment. So, for an example, if a dividend is declared on a stock that is under SBL, lender can recall the SBL transaction before the record date, and he will be eligible to receive the dividend from the company, and he will be there in the company registrar's list. So he'll get the dividend from the company itself. Alternatively, if he has not recalled, the CDS will create an obligation to the borrower as a cash compensation, that equivalent amount of cash dividend amount that the lender is supposed to get if he had shares in the CDS account, will take that amount from the borrower and will be passed to the lender through the lending brokers. And this will not be classified as a dividend payment, but it will be a manufactured payment, or we call it a cash compensation in lieu of the corporate action benefit. Key factors that we need to remember when engaging in stock borrowing and lending and regulated short selling. So each lender and borrower will have to enter into an agreement with the participant, that means the broker, custodian, bank, prior to engaging in this mechanism. So this will be a one-time agreement that you need to enter. So you don't have to enter into agreements each time that you do a SBL transaction. It's just a one-time agreement that you need to enter with your brokers. So, like I explained, this is a mechanism done through the CDS systems, and the brokers and the custodian banks have been given the ability to submit orders to the system. So, any borrowing and lending request should be made through your stockbroker firm or your custodian bank. Understandably, internet trading is not allowed because we do not allow direct customers placing orders. There are no minimum or maximum duration for SBL transaction. It can be agreed upon at the discretion of the borrower and the lender. No transaction fees charged for engaging in SBL transaction. No CDS, SEC, government or brokerage fees that we will be charging. But when you do a regulated short selling, normal transaction fee will be applicable as similar to a normal sale transaction. The borrower has the option of closing the SBL transaction before the return day, that means early settlement. So he'll have to notify the lender 1 day in advance. So if the borrower and lender both parties agree, they can postpone the return date to a future date, but they will have to both give their consent and inform the CDS. So lender can recall back the share early recall subject to certain limitations, like I explained before. Only in the event of a corporate action or a voting at a shareholders meeting, lender is eligible to recall the shares. For any other reason, the CSE will not allow lender to recall any SBL transaction at their will. So on the return day, the borrower must make available the shares that he borrowed in his CDS account. If shares are not available, this transaction will be considered as a default trade, and a compensation will be paid by the borrower, which will include the value of shares and an additional penalty to the lender. When you are returning the shares, all borrowed shares must be returned. No partial settlement is allowed. So this is about regulated short selling and stock borrow and lending. So if you want to get more information on these two mechanisms, created a new page in the CSE website under the same heading, regulated short selling and stock borrow and lending. So there are material available for you to go through and get a better understanding, including the concepts, the frequently asked questions. We very soon host in the rules as well in the same section. So we would invite you to go through those material and engage, participate in stock bar and lending. And if you have still queries, you can ask in the chat. We will take some time to give answers, and also you can talk to your investment advisors. They will also be able to give you an advice on how to engage in this stock borrowing and lending transactions. So this is the end of the presentation. So we'll take some time to answer a few questions. So if you have any questions, you may send in as a chat. We might respond to you directly, or we will uh, discuss the questions here in the forum. So many questions on whether we can share the presentations. Yes, we will share the presentation with the participants.
Someone has asked about the implement date. So we will be implementing this around first in another few weeks, maybe first week in November. So we are in the final stage of testing the systems.
There's a question of how rights are handled. So the same procedure will be applied that I explained you under corporate actions. That is, the lender will have the right to recall the SBL transaction if he wishes. If not, the CDS will take the value of the rights from the borrower and will be passed to the lender. based on the rights price on the first trading date. So we'll take the cash value and pass it to the lender on the first day of rights trading day, and so the lender will be able to go to the market and purchase the rights. Then he can decide whether he can subscribe or sell or keep the rights. So to introduce the internet traders, for as at now we will not at the first phase we will not be introducing to the market directly. So maybe at a later point, when the market gets familiar with the short selling process, it will be available for internet traders as well. So if the borrower does not return shares, like I explained you, lender will not get the shares if the borrower does not have, but a cash compensation will be paid to the lender, which will be equivalent to the value of shares plus another added penalty. So that compensation will be based on the price of the return date plus another added penalty. So just to one person needs to explain with example, but I cannot tell you the numbers, but the how it works SBL transaction and a regulator short selling is, again I'll explain you, which I explained in the second slide. So you first borrow securities from a lender to a CDS account, and do a selling, which we call it a short selling. So it will be at the market price. Let's say the current you borrow the stock of JKH today, and the current market price is 100, so you will sell it at 100 rupees. The purpose of you borrowing and short selling is that you are expecting the price of JKH to fall, maybe let's say in 30 days or 60 days. So when the price goes down, let's say 80, you purchase the stock from the market at 80 rupees and return to the lender on the agreed return date. So that 20 rupees will be your profit on that short selling. Uh, there's a question on the rate, lending and borrowing rate, whether we are not regulating any rates. We do not give any maximum or minimum rates. It's totally up to the lender and the borrower to agree. Based on that, they will be paying or receiving the lending fee. So if there's a subdivision, uh, there's a question how it is handled. Yes, if there's a subdivision, the borrower will have to return the adjusted quantity to the lender on the return date.
Someone has asked whether the separate index is available. No, these short sell orders will consider as a normal sell orders. So the index will update according considering those sell orders as a normal sell order, but we'll publish the total short quantity in our website. But there is no separate index for short selling or SBL.
So there's a question uh, whether the market observe the short selling opportunities online, even though we can't trade to observe only. Uh, Short selling will not be shown in a market, because in the market it will only be a normal sell order. So the buyer, the purchaser or the buyer will not know whether he bought a short sold quantity or a normal quantity. But the stock borrowing and lending mechanism, the borrowing and lending orders will be shown in the CSC website real time. So you will know what are the lending orders and the borrowing orders in the market right now. You can talk to your brokers also; they'll also be able to advise on that. But in addition to that, it will be available on the CSE website publicly.
There's another question asking whether someone can use this system to manipulate the market. So that's there are two teams in the SEC and the CSC monitoring the market manipulation. So if someone tried, then there will be some action against them.
So there's a question whether is it must to have 5% of the total company share? No. What I explained is the maximum quantity that can be borrowed or lent or shorted is 5%. So it can go up to 5% only. Let's say you have only 100 share, you can do a borrowing and lending. Another person can do 1 million, 5 million, but the total quantity can only be 5% from the issued quantity. It's not that one person will have to have 5%. It's the total that we talk about here.
Someone has asked whether the maximum gain can obtain through the short selling is 20%. No, we stop short selling during that day if the price goes below 20%. But in the next day, you can trade again. So it's not only one day, it's a 20% limit to the one day. So in the next day, you can again short sell compared to the previous day's closing price. So the uptick rule, it's like this. So if the previous closing is 100 rupees, then if the closing normal trading market price went to 90, less than 90, between 90 to 80, then the price has gone down by 10%. So then you can't place new short sell orders below last traded price. It should be always above the last traded price. Then if the price goes down further and goes below 80, that means 20% from the previous day's closing price, then we stop short selling for that security for that day till the price recover. That is the new uptick rule.
So the borrowing and lending orders will have to be submitted through your broker. There is no specific system that you two parties will have to communicate. It's the normal channel. It can be in the form of email or call. The usual, the modes that you usually give instruction to the broker, you can follow that.
Eligible security list will be updating when we are go live, and it will revise quarterly. So we'll update the list every quarter in our website.
The percentage of security already traded under SBL can be inquired through a stockbroker. So there's a question asking how is going to receive the recording, whether it's by email, drive, or file by mail. Appreciate one of our marketing colleague can answer this question from CSC. Okay, so we will communicate the mode through an email, so you will know whether you will know how the recording file will be accessed.
There's a question on the minimum requirement, minimum cash requirement for the short selling. There is no minimum requirement. So you can even short sell one share.
So there's a question on how will the dividend compensation be determined, taking into consideration tax exempt dividends and final withholding tax? No, that is applicable only in the event if you are receiving the dividend directly from your listed company. So this is not a dividend payment per se. So this is a cash compensation that we take from the borrower and pass to the lender. So it's a manufactured cash payment. So withholding tax for the dividend will not be applicable. The normal tax regimes for income will be applicable for the lender, but not the dividend tax.
There's a question on eligibility criteria of the stocks for the SBL and RSS. So that will depend on the liquidity of that security. So we consider previous 3 months, previous quarter liquidity, number of trades and the public holding and the number of shares traded. So based on that, we derive what are the securities eligible for the SBL and RSS.
So I believe there are no further questions. I hope we've answered almost all the queries. So like I explained you before, you may talk to your brokers. You may go through our material which is published on the CSC website. So please do get back to us directly. There are contact numbers available on the CSC website, or talk to your investment advisor. They'll be able to uh, help you out. So there's a final question about the dividend tax was not clear. So like I said, it's not the dividend payment. It's a dividend that you are getting from the borrower as the lender. It's a manufactured payment that will be paid. It's just a cash compensation in lieu of the dividend payment. So you will receive the dividend amount gross. It will not be taxed based on the dividend tax or anything. It will just be an income to the lender. So any if that lender is a tax paying lender, then the normal tax regimes will be applicable as an income to that lender. I hope that clears his question. So once again, thank you very much for participating. So if you have any further questions, please do get back to us, to your stockbroker or directly. Thank you very much. Have a good day.